Welcome to the NWR Communications Near-Term Producers Conference. My name is Kerry Stevenson. Next up, we have Piedmont Lithium, and joining me is Keith Phillips. He's president and CEO. Joining me from North Carolina, no less. Now, Piedmont Lithium, they are developing spodumene as well as lithium hydroxide projects in the US, in Canada, and in Ghana. Here to tell us the story. Welcome, Keith. Great to see you. Thanks for joining us from North Carolina. Love that area.
It's a great area. We're very lucky to be here. Our head office is about 10 minutes west of Charlotte in Belmont, and I'm in Charlotte right now, actually. So very pleased to be joining you and the NWR team and to talk about near-term production in lithium, which we think we'll have a lot of. So I'm excited to tell the story. So I'll just dive right in. Feel free to interrupt with questions along the way if you have any. So our kind of tagline is helping secure America's energy independence. We are very reliant today, the Western world is, to China, reliant on China for lithium hydroxide production. We aim to cure America of that disease here over the next several years. I look forward to telling you guys the story. So quick highlights about Piedmont. We were founded as an Australian company. We re-domiciled last year to the US, so we're an American company listed on NASDAQ, but also the ASX. We have many really good and important shareholders in Australia. It's an important part of our story. On the left-hand side, just some bullets. We are developing domestic lithium to power America's energy transition. We have plans to develop 60,000 tons of lithium hydroxide production in the United States in 2 different plants. We control over 500,000 tons of spodumene concentrate annually from assets in the US, Canada, and Ghana. That's a big number. That would make us number 3 or 4 in the world today. So it's very significant in scale. And we have potential for near-term cash flow and production in 2023 in Quebec from the restart of North American Lithium with our partner, Sayona Mining. And we have potential for near-term cash flow in 2024 in Ghana. We'll talk more about that. We have a very impressive sustainability profile across our asset base. We have a very strong leadership team for a company at our stage in development. And we raised money recently, so we have a strong balance sheet to execute on our catalysts over the rest of this year. I'll talk more about those later. On the right-hand side, you can see we have 1.8 billion share CDIs outstanding in Australia. Market cap in Australia about $1.7 billion. Cash balance estimated tomorrow, March 31st, 223 million Australian. So all the cash we need to advance these projects over the next 12 plus months. We do have very strong research coverage, principally in the US at this stage. We have 10 different analysts covering us, all with buys on the stock. The Canaccord coverage is out of Sydney with Red Spencer. I'll talk a little bit about the lithium market. Kerry, did you have a question?
No, keep going,
Sorry.
Keith.
Okay, no problem.
Yeah,
let me talk a little bit about the lithium market just to update people. This is a graph on page 5, electric vehicle sales outlook, and this is published by Matt Fernley at Battery Materials Review in London. It's a really interesting way to look at the issue we have globally in the electric vehicle business. These bars show in gray what Matt expects electric vehicle demand and sales would be if there were no material constraints, material as in lithium and nickel and other things. And in blue, he shows what he thinks EV sales will actually be. So we're going to have shortages of lithium in 2022. Those shortages are going to grow year by year in Matt's view through 2030 and then gradually taper off until the market hits equilibrium, really in the second half of the 2030s. And 2040s, a long time from now. So we believe that can only mean one thing: tight lithium markets, and anyone who can get to production should be able to do so in a very profitable environment. On page 6, this shows the issues we're facing in the US, which is massive domestic lithium hydroxide shortfalls anticipated over the next decade or so. On the left-hand side, there's a map showing all of the large chemical plants, lithium plants, or sort of battery plants that are planned by people like the big car companies, Tesla, Ford, GM, and Stellantis, and their battery partners, people like Panasonic, SK Innovation, LG, Samsung SDI, and others. And on the top right, you see a chart showing how much lithium hydroxide we believe will be required by these gigafactories in the second half of the 2020s, over 500,000 tons of annual hydroxide demand in the US. That number will undoubtedly grow as more plants are announced. There was actually a big announcement today in North Carolina, a Vietnamese company building a really big $7 billion commitment to build EVs in North Carolina, which is huge. On the lower right of the page, you see selected US lithium hydroxide supply by 2025, and you can see just massive shortages. We're not going to have nearly enough. I'd say the highlights are we produce today about 15,000 tons of lithium hydroxide domestically in the US, all in North Carolina, just down the road from us. Another highlight is we are developing two 30,000 ton hydroxide plants. We expect to be by far America's biggest hydroxide producer. I'll talk more about each of those plants in a minute, but huge opportunity. The US will remain reliant, unfortunately, on places like China, but anybody who can produce domestically will be, I think, exceedingly well positioned. You can see what's happened to lithium prices. Many of you have followed this. These are spot prices and the diamond shown from Fast Markets about a week or so ago. But you can see that the trend is very, very strong. And I think with the shortages we've seen, we expect prices to remain strong indefinitely. The red dotted lines or dashed lines are the prices we used on a long-term basis in the studies we've published recently in our DFS, definitive feasibility study for Carolina Lithium, and our PEA for our second chemical plant. Obviously, there's dramatic upside. We have huge leverage to these rising prices, as do some others. Now, just a little bit about Piedmont. Again, we do have a very strong leadership team, particularly on the technical side. And I would just highlight one of the reasons. We're headquartered in Charlotte. We describe Charlotte as the cradle of the lithium industry. Virtually all the world's lithium was produced in this region from the 1950s to the 1980s. And still lithium continues to be produced. Lithium chemicals produced here to this day. Albemarle is the world's biggest lithium company. They're headquartered 2 miles from my hotel. They have a significant operation at Kings Mountain. Livent is headquartered in Philadelphia, but has their American lithium business here in Bessemer City, just down the road. There are hundreds of experienced chemical engineers with experience producing lithium chemicals, battery quality lithium chemicals in that area, this area. That's not true anywhere else in the English-speaking world. So it's a great place to add talent. As you can see, we've added a few people from our friends at Albemarle, and there are others from Livent and Albemarle as well that aren't on the page. But we really think we have the team to execute on our strategy. We do have 4 projects. On the right-hand side, first of all, on the map, you see where I am in Charlotte right now. Carolina Lithium is our flagship project. It's an integrated spodumene to hydroxide project. We've been working on that for 5 or 6 years. We've got a DFS published in December. We're working through permitting, and we're very optimistic about how that will ultimately conclude. We made 2 investments in Quebec last year in partnership with Sayona Mining, what we call the Abitibi Hub. Abitibi is a region of Quebec. I'll talk more about that. There's near-term production opportunity there. And then we made a really good investment in Ghana in a company called Atlantic Lithium, which is developing an early stage but really exciting project called Ewoyaa near the coast in Ghana, Atlantic coast, with really big upside. And we intend to bring that material into North Carolina to produce additional lithium hydroxide. So part of our goal and strategy is to produce 60,000 tons of lithium hydroxide. And it's a goal that's underpinned by control of the raw material. So we have over 500,000 tons of spodumene concentrate per year to our name. And that's more than we'll need to produce 60,000 tons of lithium hydroxide. On page 11, we show our projects kind of ranked in terms of scale. So Carolina Lithium is our flagship. It should produce 242,000 tons a year of spodumene concentrate, 30,000 tons of lithium hydroxide. It's the only project in the world where the mining, the spodumene concentrate, and the lithium hydroxide production will all be on one site. Huge advantages from a transport cost perspective, environmental perspective, and surrounded by car companies and battery companies to ultimately deliver the material to. We own all of that project. CapEx is around $1 billion US. Base case NPV at 22,000 hydroxide, $2.8 billion US. At spot, almost $12 billion. And EBITDA around $600 million on base case pricing, around $2 billion at spot prices. The second chemical plant we're going to build, we call LHP2, lithium hydroxide plant 2. As you'll see later, this might actually be developed first. We'll talk more about that. This will be a pure chemical plant, 30,000 tons. It'll be a twin to the chemical plant at Carolina Lithium. It'll be at a different site. The CapEx is meaningfully lower because we wouldn't be building any mining, concentration, byproducts, solar infrastructure, et cetera. The economics are terrific. The IRR is over 30%. In Ghana, we are earning a 50% interest in Ewoyaa, the core project, and in fact, all of the Ghanaian lithium portfolio that Atlantic Lithium controls. We also own 9.9% of that company. We're going to fund CapEx up to $70 million to put that spodumene project in production. The NPV is currently $780 million for the whole project, 789. That'll be updated here in the next few months based on the far larger mineral resource the company has now. And again, this looks, yep.
Sorry to interrupt you, but I get the US and I get the Canada. Where Ghana just seems to be a little bit of left of field. Where was the thinking, the strategy behind that?
That's a great question. You know, we used to include in our presentations a map of the world showing where all the spodumene projects are. And a lot of them are obviously in Australia. And there's, a couple projects in Brazil, lots in Canada, et cetera. And a few really important ones in Africa. And I got a call from an analyst in London saying, Keith, you're missing a really exciting project. It's in Ghana. You guys should be aware of it. And so I looked it up. It was in a company then called Iron Ridge Resources, now renamed Atlantic Lithium. And it's a very exciting project. And I'll show you, I'll skip ahead just to answer your question, and then I'll come back to another factor. This is on page 14. This photograph is an aerial photograph of the port of Takoradi. It's a very major port on the Atlantic Ocean. 70 miles to the east is Ewoyaa, the core project of Atlantic Lithium. It's a mile from the Atlantic Ocean, 70 miles by truck to this major port, easy to transport. So it's a 30 million ton resource at 1.26% Li2O. It's amenable to DMS processing. It's actually really well located. And interestingly, when you look at a map like this, and you think about the distance from, say, Val-d'Or, Quebec, where Sayana's operations are, to us in North Carolina, we think it would cost less to import spodumene concentrate from Atlantic Lithium in Ghana than it would from anywhere in Quebec.
Really?
And meaningfully less in other countries. So, yeah, it's exceptionally well located. It's by far, we think, the best located lithium asset in Africa. Most are in more difficult countries, landlocked, hundreds of miles from a port. Ewoyaa is not. So we're very excited about it. And it really, our whole strategy is we want to be North America's biggest lithium hydroxide producer, and we want to control the spodumene. We don't want to be exposed to the market like the Chinese converters typically are. So this was an opportunity for us to get into a fantastic asset in a great location in a great country in Africa at an appealing valuation. And we're very excited that we did. And Atlantic Lithium, the public company, which trades on AIM, headquartered in Australia, but trades in AIM, stock's up 150% since we made our investment. We think it's just beginning. And again, this is first half 2024 production. Abitibi Hub in Quebec, we own 25% directly. We own 16.5% of Sayona Mining, our partner in the projects. We'll have a pre-feasibility study hopefully in the next month or so, and I think the numbers will be very impressive. And very importantly, and I'll skip ahead now, this is slated for production in the first half of 2023, so very much near-term production. So flip it, page 11 shows the projects based on scale today. Page 12 shows the projects based on chronology, when we think they'll begin production. So at the Abitibi Hub, the restart of North American Lithium is essentially underway. We've ordered long lead items. This is an existing project. I'll show you more in a minute. But it's a relatively simple restart of an existing plant that's produced off and on for the last decade for relatively modest CapEx. Sayona is projecting first production in Q1 2023, so within 12 months. That's very exciting, and I think near-term producers deserve a premium. We're a near-term producer. I don't think the market's been that focused on it, but that's very exciting. In Ghana, we expect to publish a PFS here in the first half of the year, a DFS by the end of the year, hopefully be permitted in construction in 2023 and have first production in the first half of 2024. Our chemical plant to process the material from Ghana, we'll announce, we've engineered the plant. We're looking at 3 or 4 final locations for the plant in the southeastern US. We'll make an announcement in the next 90 days on which site we've selected, and then we'll go rapidly do a DFS and permitting. And permitting should be straightforward. There won't be a mine on site, so it'll just be an air permit. We should qualify for, we think, an accelerated review because it'll be a relatively small chemical plant by US standards. And the sites we're looking at are all industrially zoned, so there shouldn't be any rezoning to deal with. That'll be a 2-year construction project, but we'll be up and running producing spodumene concentrate in Quebec for a couple of years, in Ghana for a year before this comes into production. And the Carolina Lithium will be, while it's our flagship and our biggest project, it'll end up being our 4th in production, probably just because the permitting process it's going well, but it's more involved. We've got, there's a mine permit we expect to get this summer. We need to rezone the property that we own as private property that we own from residential zoning to industrial zoning. And we need to get an air permit to be a Title V air permit, which will take more time. But in aggregate, if you look at this, we're going to have 60,000 tons of hydroxide capacity. That'll require 390,000 tons of spodumene concentrate. We'll have excess concentrate availability. We will ultimately build additional hydroxide capacity, probably in Quebec. And with that, let me just focus now I want to focus on the 2 projects that are nearest term in terms of production. First, Abitibi Hub and really North American Lithium. And the photograph on the top of the page, this is not a schematic, this is an actual photograph of North American Lithium. And the mining operation in the top right, crushing operation here. This was built in 2012 to 2014 for $400 million. It's a significant project. I was there in 2018 when it was owned by CATL and ramping up production. And as everyone remembers, spodumene prices fell pretty dramatically from sort of 900 or 1,000 in early 2018 to under 400 a couple of years later. So CATL put this on care and maintenance. They didn't need the material. There was excess spodumene. They then kind of abandoned the project. It was in a receivership process, and Sayona and Piedmont acquired it last year out of the receivership in August. And the timing couldn't have been better. We're now in a bull market. And this is, there's 4 highlights about this project that I think are critical to understand. Number one, it's by far Canada's largest lithium project. So over 100 million tons of spodumene resources in the Abitibi Hub, which is NAL principally, also Sayona's OTA project. It's the best located lithium project in Canada. It's near the mining town of Val-d'Or with a lot of workers, trades, spare parts, et cetera. Most of the other lithium assets in Canada are remotely located, away from rail, fly in, fly out labor. It's also by far the most advanced in that it's already built. And again, here's the photograph. And importantly, another highlight, in securing our investment in these assets, we secured an offtake agreement as well. So we get the greater of 113,000 tons a year of annual production, or 50% of annual production. It's a market price deal, but there's a floor price of 500. There's a ceiling price of 900. So above 900, Piedmont gets the economics for that share of the production, which could be very exciting, obviously, in a bull spodumene market. So we're very excited about this. We should publish a PFS in the next 30 days or so. We'll then have a formal development decision, but long lead items are ordered. That money is spent. And we're very excited about putting this into production in the first half of 2023. In Ghana, we should be in production a year later. We talked about this jurisdiction, the location. This is going to be a significant spodumene project, 300,000 tons of annual production. We're going to own half of it. We're going to have offtake for half at market prices. So as you think about our business, the second chemical plant will be buying material from Ghana. We'll be paying market prices within that second chemical plant to get the spodumene, but we'll be paying it to ourselves. So we'll be collecting that income at the Atlantic Lithium level, which we think will be very profitable. And this should be simple DMS only, sort of like a core lithium, relatively small CapEx, competitive OpEx, given the grade and location. And we think it'll get dramatically larger with exploration results, et cetera. So we're very excited about that. Our second chemical plant, here's a schematic of this plant. It'll be a twin to the plant we're going to build at Carolina Lithium. CapEx is significant, $572 million. OpEx is high because we're assuming we're paying $1,200 a ton for spodumene concentrate. Obviously, that's the most important cost consideration. But this will be very profitable, we think, in the pricing environment we expect to prevail. And it's very strategic. And as we think about financing this and financing Carolina Lithium, we're in conversations with potential strategic investors, and they're very excited about the scale of our business. 60,000 tons of hydroxide is a lot. It'd be by far the biggest in the US. And if you're building a car plant or a battery plant in the US, having Piedmont as a supplier, we think will become very important to those companies. A couple more things I just want to highlight before I wrap up and go to questions. I think it's important to think about value and the opportunity to drive shareholder value. That's my, important objective for us. So in terms of what we've accomplished in the last year or so, we've built a very strong leadership team. We've become an American company. There are only 3 American lithium companies, Albemarle, Livent, and Piedmont. There are others listed here, but there are only 3 that are American. We made 3 very important investments in 2021, strategically in 2 in Quebec, 1 in Ghana. We completed a bankable feasibility study for Carolina Lithium and a PEA for our second chemical plant. And the future milestones really over the next several months, we're very excited about. In Quebec, we should publish a feasibility study in April. We'll have a restart decision to follow that. That's going to be $80 million US of total capital. Our share is 20 million to get that in production. That is funded from our perspective. We're very excited about that. Again, near-term production. In Ghana, we'll have a resource update. That's in green because it just happened. And the resource update was significant, particularly in the indicated category. Feasibility study should come in Q2, pre-feasibility study, and permitting work is underway. We think this is first half 2024 production. Lithium hydroxide plant 2, site selection, DFS, both this year, site selection hopefully by June, DFS by September. And then the permitting process should be, we think, quite quick. And we think this should be funded and in construction by early next year for production by the end of 2024, early 2025. Carolina Lithium will happen last, which actually works out really well. We like the progression of spodumene restart, greenfield spodumene DMS only, a single chemical plant, and then the Carolina Lithium project, which is bigger and more complex. It's got a significant mining operation, concentrate operations, byproduct, solar farm, electric conveying system, and a chemical plant, and it's $1 billion project. So the idea that that's going to happen fourth is something I think our shareholders really appreciate. We should have interesting news, we think, this year in terms of our strategic partnering process for Carolina Lithium and LHB2, and with that, offtake discussions, and those are well advanced. And I would just highlight some companies on the right-hand side of the page I think are really good companies, friends of ours. I have a lot of respect for Core Lithium, Liontown, AVZ, LAC. LAC's a US listed business. I think if we hit these future milestones, our position on this chart will look very different in a year. And we think there's really dramatic upside in our story. And with that, I will pause and see if there are any questions.
There are, Keith, but we're running out of time. So I think I've only got time for 1 or 2. Let me just ask this quick one there from Dev. He said, and I agree, there's a huge difference between the contract and the spot price. So can you discuss your view on the difference, but more importantly, I guess, the long-term price expectation and average realized price? And for me, it's kind of like, how do you manage that with the price being so strong? How do you manage, I guess, best outcome for shareholders?
Listen, ultimately, we want to be exposed to lithium prices. We think our investors want us exposed to lithium prices. We think they own lithium stocks because they're bullish on lithium and lithium prices. I would disagree with the premise that in the long run, spot prices and contract prices are meaningfully different. I expect increasingly contracts signed by majors, and we will be a major, to be rebased from a pricing perspective on a regular basis rather than annually. I think it'll be quarterly or even monthly, with reference to spot indices. I think that's where the industry's going. You saw Albemarle in Q4 get pounded for having long-term contracts with price ceilings in them. We don't intend to do that. Obviously, we'll see how things go with each of the customers we talk to, but I think we believe we want to have exposure. I think the right thing for the car companies and battery companies is to do what we did with Atlantic Lithium, own the asset. So be an investor in, say, Piedmont Lithium, pay market price for the material, but pay it to yourselves because you're an owner. And I think in that case, the folks can control security of supply, cost of supply, and achieve their strategic objectives.
Keith, we've run out of time. As I said at the beginning, ladies and gentlemen, ASX code is PLL. These guys are getting on with it. They're going to be a significant supplier of lithium going forward. Lots of news flow to come. Keith, thanks so much for joining us at the NWR Communications Conference today.
Thanks, Kerry, and thanks everybody at NWR. Really appreciate it.